Welcome to the Mortgage Rate Weekly Market Update for the week of March 5th, 2018. Hello, I'm John Thomas with Prime Residential Mortgage. Here to give you your update. Well, last week mortgage rates did try to improve, but they did end the week slightly higher than where they started. Take a look at the bond chart on the screen. You can see since the beginning of the year, mortgage bonds have been selling off. You can see that long-term trend, which has been moving mortgage interest rates higher. We've broken through a bunch of floor supports, and if we look, mortgage bonds over the last couple weeks been trapped between these two levels of support and resistance, been trading in a sideways pattern up and down. Tried to break out last week, but on Friday sold off after failing to break above the 25-day moving average. And part of that was the talk on the tariffs. So they did sell off, break below ceiling of resistance. The long-term trend is for mortgage rates to move higher. So with the mortgage bonds failing to break above 25-day moving resistance, worrying about inflation, we're going to go ahead and recommend locking in mortgage rate to make sure they don't get worse. So go ahead and lock in what you got. The long-term trend is still for mortgage bonds to sell off, moving interest rates higher. Now, if we dig into the economic news, big headline news on Friday is the Trump tariffs. Basically, President Trump's wants to put tariffs on incoming imports of steel and aluminum so that we can compete here and don't lose those industries. It was defense related as well as jobs related. If we don't do something, it looks like the aluminum business will be gone in the United States in the next year. Steel would be soon to follow, so the tariffs were a way to try and save that. So if anything ever happens in the future, if we can't produce our own steel and aluminum and we're in a defensive war situation, that could be a problem. So that was the theory behind it. Right or wrong, who knows? How it'll play out, who knows? We'll have to see. But that would be inflationary if we did it, because it would make the cost of goods produced with steel and aluminum cost more, like cars. So that was not good news for mortgage bonds, so they did sell off in response to the news. Now, we did see the second reading of the fourth quarter GDP, which came in at 2.5%, so that's a good reading. Then we saw the fear of inflation. Now, outside of the Trump tariffs, the fear of inflation was eased a bit when we saw the core consumer personal expenditures, or the PCE. It came in only at 1.5% year over year. That's the Fed's favorite measure to look at of inflation. Their target is 2%, so that's well below their target. Then we saw weak initial jobless claims come out on Thursday. They dropped 10,000 claims to 210,000 claims for the week. This was the lowest figure in initial jobless claims since 1969. And last week's numbers were also revised lower by 2,000 to 220,000 claims. Last week is the sample week being used in the February jobs report, which is coming out this Friday, March 9th. So that is pointing to a very good jobs report, which could be bad news for mortgage bonds as well. So that's another reason to lock heading into this week. Now, in housing news, couple reports there. The first one, we saw home prices continue to rise as the Case-Shiller Home Price Index for December 2017 showed a 6.3% increase year over year, and home prices moved up 0.6% from November 2017 to December 2017. And again, the biggest driver of the upward price pressure is this limited inventory. The number of homes for sale keeps dropping, putting more pressure on prices of homes for sale. Then we saw new home sales for January 2018. They were surprisingly down 8% to 593,000 units on an annualized basis. Now remember, new home sales is the number of contracts signed to purchase new homes from home builders. The median home price of a new home was up 2.5% year over year to $325,000. Again, low inventory pushing the price of new homes up as well. Then we saw pending home sales for January 2018. They were also down 4.7% to 104.6 on the index. Again, pending home sales measure the number of contracts on existing homes that are for sale. The main reason for the decline, according to NAR, is again the drop in inventory of homes for sale by 9.5%. So the buyer traffic's up, but the inventory's not there. So that we'd expect pending home sales to drop, so that's going to put upward price pressure on homes. So we have the demand, we just don't have the supply. So if you're looking to buy, get out there and buy now. The sooner the better. Two big reasons: home prices are going to keep going up and interest rates are moving up. So the longer you wait, the more it's going to cost you. Then on the local news, we've got a first-time homebuyer seminar coming up Saturday, March 24th in Newark, Delaware from 10 a.m. to noon at the Christiana Hilton Hotel. Then we've got one Wednesday, March 28th from 6 to 8 p.m. in Wilmington, Delaware, in Independence Mall at the eXp Realty office. So we got those two events, and then we're coming back to Dover in April on Saturday, April 7th from 10 a.m. to noon at the Garden Hilton Inn there on Route 13. If you want to register for either one of those events, give us a call in the office, 302-703-0727, or online, www.delawarehomebuyerseminar.com. Look forward to seeing you guys next week.